All right, today we are diving deep into the complete playbook for the prop firm Take Profit Trader. We're going to cover the whole journey from proving your skills in their evaluation all the way to the most important part, actually getting paid. Let's jump right in. So let's kick things off with a question I bet a lot of you have asked yourselves. Do you have the skills, you have the strategy, but you just lack the capital? I mean, trading your own money is risky, and for a lot of traders, you just don't have enough to make a real career out of it. So what's the alternative? Well, that's where proprietary trading firms, or prop firms, come into the picture. They basically solve that capital problem by giving you the chance to trade their money. It really levels the playing field and limits your personal financial risk to just the fee for the evaluation. Now, of course, to get your hands on that capital, you've got to prove you can trade responsibly first. Take Profit Trader uses a one-step evaluation process, and we're going to walk through it right now, starting with phase 1, the test. Okay, so this first stage is all about proving you've got what it takes. Before you can get funded and trade what they call a pro account, you have to pass this initial evaluation in a test account. It's really designed to filter for traders who are both consistent and know how to manage risk. So you've got options. Take Profit Trader offers 5 different account sizes, starting at $25,000 and going all the way up to $150,000. Each one, as you can see, has a specific profit target you need to hit, and, maybe even more importantly, a maximum trailing drawdown that you absolutely cannot break. And hitting that profit target, that's just one piece of the puzzle. You also have to follow a core set of risk management rules. You've got to trade for at least 5 days, you have to respect that drawdown, prove your profits are consistent, and stick to approved products during specific hours. Let's break down the 2 rules that tend to trip people up the most. Okay, understanding the drawdown is absolutely crucial. I mean, it's the #1 reason traders fail. In this first phase, they use what's called an end of the day, or EOD trailing drawdown. And this is actually a huge advantage for you, because it means they only look at your closed balance at the end of each day, not your floating profits while you're in the middle of a trade. Let's make this real with an example. Say you're on a $25,000 account. Your absolute minimum balance starts at $23,500. Now, if you have a great first day and your closing balance is $26,000, your new minimum balance trails right up behind it to $24,500. This keeps happening until your minimum balance hits your starting capital, the initial $25,000. At that point, it locks in and never moves higher, which gives you a permanent buffer to work with. They also have what's called a consistency rule, and this is to make sure you're not just a one-hit wonder. Basically, no single trading day can account for more than half of your total profit. They want to see a balanced profit distribution to pass, not just one massive lucky day that happens to push you over the finish line. And finally, there are just some logistical rules. You have to trade approved futures. Think things like oil, gold, or the major stock indexes. And, this is the big one, you have to close out all your positions by 5 p.m. Eastern Time. Holding trades overnight is a no-go. All right, so you've passed the test. Congratulations, you now graduate to a funded pro account. This is where you can actually start earning real money. But, and this is important, you need to know that the rules are not exactly the same in this new phase. Let's see what changes. The rules definitely get a bit stricter in the pro account. The single biggest change is the drawdown. It switches from that friendly end-of-day calculation to an intraday trailing drawdown. What that means is it's now tracking your highest balance in real time, and that includes your open unrealized profits. This demands much, much tighter risk management. You'll also see you can't trade major news events anymore, but the big upside is you can start requesting payouts from your very first day. And speaking of those news restrictions, here's the deal. For major economic releases like an FOMC statement or the big jobs report, you have to be completely flat, no positions open, for 1 minute before, during, and 1 minute after the announcement. This is purely to protect the firm's capital from those insane market swings. They also want to make sure their funded traders are actually, trading. So to keep your pro account active, you have to place at least 1 trade during any given calendar week. This just prevents people from squatting on a funded account without ever using it. Okay, so you've passed the test, you're trading the pro account, and you've made a profit. Now, for the best part, how do you actually get paid? Let's break down their entire payout system. The profit split is really straightforward. It's an 80-20 split. That means you, the trader, get to keep 80% of all the profits you generate in your pro account. The firm keeps the other 20%. Simple as that. Now, Take Profit Trader advertises that you can get paid on day one of your pro account. And while that's totally true, there is a key concept you've got to understand before you can make that first withdrawal. It's something they call the buffer zone. Just think of the buffer as a kind of safety net for the firm that you build with your first profits. The size of this buffer is the same as your maximum drawdown. So on a $50,000 account with a $2,000 drawdown, you first need to get your account balance up to $52,000. Once you've done that, you can immediately withdraw 80% of any and all profits you make above that $52,000 level. So a natural question is, what about that first $2,000 of profit that's sitting inside the buffer? Can you ever get that money? And the answer is yes, you can, but only if you decide to close your pro account and end your relationship with the firm. And the amount of the buffer you get to keep depends on how long you've traded the account. If you decide to close it within your first 60 trading days, you'll get 50% of the profits held in that buffer. But if you stick with them for more than 60 days, you'll get your full 80% share just like a regular payout. Ultimately, this whole process, from the initial test to this very structured payout system, it's all designed to create a disciplined environment. One that, as this funded trader says, can help turn trading into a truly tangible career path. The big takeaway here is that prop firms like TakeProfitTrader offer some incredible leverage and opportunity. But that opportunity comes packaged inside a very strict framework of rules that you absolutely have to master. The path from that initial test to a final payout requires skill, a ton of discipline, and a deep, deep understanding of every single rule along the way.